Hey guys, it is so easy to be mesmerized by the markets making all-time highs, and yet this is such a crazy and exciting opportunity to actually short. Right now, you can basically short almost anything and make money. The question is, do you know how to do it, and do you know where to look for the bigger opportunity? In this video, I'm going to give you specific reasons why I believe the market has just hit its all-time top, at least short-term wise. And in this channel, again, we specifically focus on trading options, weekly options that expire this week, the following week. We specialize in trading short-term. So this is going to be useful information for anyone that is a day trader, whether you're trading stocks or options. Definitely pay close attention because I will point out some specific that make me believe the market is about to correct 10%. As a matter of fact, if you're a VIP day trade subscriber to our services, on August 13th, I specifically sent a message saying that the market has a high probability of correcting to the magnitude of about 10%. Now, I'm not saying this is a market crash yet. However, this 10% drop, which I view could happen over the next 8 trading days, could actually result in something bigger, in a further drop. So here's some few things, and as we go through this video, I want to make it very, very clear that you cannot make 1,000% return if you close out your positions when you're making 20% or 50%. Okay, and I'm going to give you multiple examples. And yes, I am kind of actually frustrated with some of the traders, some of our subscribers, because guys, time and time, over and over again, okay, do not close your positions. You got to have some patience, okay? When the market environment dictates for you to keep your positions open, and by the market environment, some of you that have taken our courses, you should understand that in a rising VIX environment, in a rising volatility environment, which is what the market is right now, you want to hold on to your positions. You don't want to close them daily, and this is how you're going to be able to accumulate 500, 6, 7, 800, 9,000 crazy returns over the course of these next few days. So stay with me and take some notes. So graph number 1, chart number 1, Google. I'm saying tech sector is done. Not done permanently, done temporarily. Okay, temporarily Google is stopping out around 1250, 1260 range. If you look at the chart, I'm not going to go into a lot of details about all the things that I'm seeing in the chart. I'm just going to point out a few things as we go through this because I'm trying to cover it. Look, guys, the markets are so freaking excited right now. You got to be glued to your computer, planning your trades, you know, looking at closing your profits out, some of the positions that you started a few days ago, and looking for some new awesome opportunity because definitely here, the markets are finally getting exciting again. Okay, so what do we have here in the Google? And by the way, if you are trying to learn how to read the charts, definitely take our chart course. The link should be somewhere below this video. Okay, so here's your bearish candles right here. And it's not just one, it's not just two, okay? But look at this, just look at the history of Google, right? Every time you have these bearish candles forming, it has a significant pullback. We're not talking about a pullback of $10. We're talking about a pullback to the magnitude of $200. Okay, now we have these bearish candle formations back to back. Clearly, okay, your RSI is in a diminishing trend. As Google trying to go higher, what you actually have is nobody's really buying the damn thing, okay? Nobody is buying the dip. It just hit its all-time high of close to $1,300. It has fallen. It looks like they were buying the dip here, but at this point, everybody's selling, okay? So it's not going to go higher and break to all-time highs on diminishing volume. So the volume right here, this is what you see on this chart, the volume is going lower, which decreases the probability of the stock setting an all-time high. The same thing we're seeing at these levels, people are starting to come in and take profits on the Google. The reason I'm bringing stocks like Google and Amazon and so on, yes, they have a heavy percentage participation in the indexes overall, but more important, they're the best stocks. So look, I try to keep things simple, guys. If they're not buying the best stocks, they're not going to buy the worst stocks. And so these are the stocks that has been moving the market forward. So if these stocks, they're not going to buy them further, then the market is going to stall. If it's going to stall, it could stall for a while, which it has been doing for the last 45 days. And at this point, there's a high probability it's going to reverse and go lower. So what do we see Monday on the 13th, okay? Well, interesting thing we're noticing, as everybody clearly is bullish, Amazon is the best stock in the world and so on. You know, I love this, I love hearing stuff like that. Oh, Amazon is the best company in the world. It's the best stock in the world. It's like, look, why don't you just call Amazon Bitcoin, right? Because that's what everybody was saying about Bitcoin in December of 2018, right? Oh, Bitcoin can do no wrong. Bitcoin, $1 million, so on, whatever. Look, Amazon, Bitcoin, call it whatever you want. It doesn't matter. Guys, the charts, they don't lie. Look, as Amazon hits its all-time high on Monday, right? Look how fast. So it opens up. It literally just storms out like a rocket, trying to go to the moon, hits a high of 1925. Shortly tries to take that high out right here again, as represented by that purple dot. And then what happens? The sellers come in, and the stock sells off just as fast as it tries to go to the moon. Actually, if we're to just isolate this part right here, this would be indeed a representation of what Bitcoin did. So just keep that picture in your mind as we're going for the rest of the charts here. Okay, so to me, intraday, and if you listen to some of my videos and some of my courses, okay, it's a good idea to take at multiple charts, multiple time frames to really get a good reading of what's going on. Okay, so as it hits all-time high, it sells off immediately. Not a bullish thing. That's actually a bearish thing, guys, okay? Moving forward, what happens the same day as Amazon tries to hit its all-time high? It does hit its all-time high, right? 1925. Well, clearly, we're seeing some institutional investors at 2 o'clock that afternoon. They're actually coming in and they're selling a good size of 1,950 calls. Basically, institutional investors saying there's no way, hell in the world, Amazon is going to go above 1950. So we're going to sell a bunch of calls here, basically saying that it's going to drop. So as Amazon reaches full-time high, institutional investors are selling calls. They're not buying calls. Coincidentally, what happens to the VIX as Amazon clearly reaching its all-time high? Well, surprise, surprise. What an interesting case of a divergence. Okay, as some of the best stocks are going higher, shouldn't the VIX actually be going lower? Well, no. The VIX, your fear factor, your volatility index, okay, is actually going higher. It should be going lower, but it's actually going higher. So keep that picture in mind as well, because we'll have some relevance here just in a bit. Okay, Amazon, multi-top formation. At this point, we're not talking about a double top that I have seen. What we're talking about is, here's your first top when it tries to rally to 1920. Here's your second top. That was the day it set an all-time high at 1925. Another run higher at about the same range, 1925. This morning on the 15th, it sets a high of 1926, starts dropping right like a rock from there. If you watched my Netflix video when I predicted that Netflix was going to drop $50, you will see, if you go back and you look at that video, if you want to be a student of this business, if you really want to understand how these things work, okay, go back and look at that video. So to bring some more clarity, because I go in detail explaining why Netflix was going to drop $50 within a short amount of time, actually. So very similar top formation as I was observing the Netflix at the time. We're seeing it in Amazon. And no matter how strong Amazon is, if the rest of the technology stocks are selling off, which they are this week and probably next week, Amazon is going to drop as well. It's not going to set all-time highs. Okay, so Google is not looking good. Amazon clearly showing the signs of topping. Now look, some of the other stocks, okay, that's been all-time favorite. And by the way, here's where I want to say, guys, okay, if you're getting my alerts, and if you're not subscribed, subscribe, use some of the links below. But if you are getting the alerts, very interesting thing, very important thing, it's probably the #1 common mistake, okay, of how a good alert can go bad. Okay, look, the alert was sent out right here on Spotify to buy 190 puts. At the time here, they were trading it like super cheap. It was at $194. Now, clearly, if you would have executed the alert right there at that moment, the stock would have actually moved up against you roughly $1.80. So a lot of traders, what do? Well, you actually get out thinking, oh my God, it's going to go even higher. No, this is where you actually want to add to your position. When the market's at all-time high, you're in a rising VIX environment, you got a stock that trades at crazy, crazy multiples, okay? That's a recipe for disaster. Okay, so if you would have just stayed with that position, okay, you would have clearly made 250, 300% gains, because these options, they literally skyrocketed once that next move came in here. Now, we're not even talking about, this is a daily chart, right? This is a move from, 11:30 in the morning till 3 p.m. So what I'm saying is, have some freaking patience, okay? When you get the alert and it goes from 11:30 to 12, $1.80 against you, okay, have some patience to stay in the position, okay? Otherwise, what you're going to keep doing, every time you're going to get scared, you're going to get out of the position just when the perfect timing is going to happen, right about the time when the stock is going to reverse. Okay, so stay with the positions. Don't just jump in and out of these trades. So just keep in mind, when you get the alert, sometimes the position may go against you. Okay, but it doesn't make the entire trade, okay, all of a sudden not applicable anymore. Things don't change that fast, within 30 minutes. If we're bearish on the stock, that philosophy, that calculation is not going to change within 30 minutes. Trust me. So if we're bearish at 194, we're still going to be bearish on the stock at 196. So stay the course. Don't jump in and jump out. Okay, very important point. All right. And why were we short in Spotify? Well, we're seeing some divergences, like we're seeing divergences with a bunch of other technology stocks. Okay, you got diminishing RSI, you got a double top here on the short time frame. Okay, you got a bunch of other things, and a lot of people have been buying the stock. So with any sort of decline, which we're seeing in the next 8 trading days, up to 10%, that stock is going to tank. Okay, it's probably going to be in a range of 175, 180 within the next 8 days. So here's the alert we send out to our VIP day trade subscribers Monday. By the way, guys, if you want to be a VIP day trade subscriber, you got to take the prerequisites, which are 2 courses. You got to take the stock chart course. You got to take the 13 market moves course to understand what you're doing here, okay? So some of the alerts that went out Monday the 13th, BKNG 1885 puts, okay? And this is where I send the alert that say, hey guys, stick to your positions till Friday. Don't jump out of them on day-to-day basis. It feels like a market top here, so there is a high probability of 4 or 5 consecutive days lower from here. Then I send another alert, 1850 BKNG puts, TDG puts, Amazon puts, 10% correction in 8 days. Okay, that was all sent out Monday. Okay, now, good example of that. Yesterday, market actually tried to rally. Okay, but don't get slaughtered by the market. Okay, because the overall trend has a high probability of going severely lower from here. So just because you may get a one-day higher in between, that's not a reason to just jump out, because this is what you would have missed on if you would have stayed for your BKNG position, okay? And that's exactly what you want to do in a rising VIX environment. Stay with your positions, okay? There were multiple alerts sent out. That first alert at 1885 that I sent out was sent out at 1042 right here. Let me go back so you guys can see it. We're not making this stuff up, right? So there it is. Actually, it was sent early, 9:42 on the chart. It shows 10:42. So the alert was actually sent a little bit early. It was sent at a higher price. Okay, so here it is. Okay, it drops like a rock. What do you want to do? Well, you want to stay in the position, okay? Because this is what happens to BKNG next, okay? And by the way, if we're to summarize, a few days ago, I put a video saying, hey, this stock is about to drop 200 bucks and so on, okay? If you want to know the reasoning for that, estimate and prediction, you should check out, somewhere on this channel a few days ago, I posted that video. But the bottom line is this, okay? What do you do? A lot of times I talk about how, hey guys, don't trade stocks. Don't trade options on them before the earnings announcements, okay? So how do you trade them? Well, the best trade, I was sending out the alerts to buy after that drop did happen, by the way, okay? What you want to do is you want to pay close attention to where the stock is going pre-market, after-market, and so on, what kind of lows and highs it actually sets. Okay, so what do we get on? So BKNG, instead of falling 200 bucks that day, drops like 220 or 30 bucks, right? Then it bounces higher. So in a bad news environment, in a downtrending environment for a stock, what you want to do is every time it goes higher, you want to short it. You don't want to sell it. So this is another situation, right? If you have a put position on Priceline, ticker BKNG, and all of a sudden it started rebounding, I guarantee you, because I know I talk to you guys all day, okay? So like, you guys got out of this position right here. What you should have done is you should have bought more puts here, and you should have bought more puts as the stock was climbing higher. So in terms of puts, again, when you're in the rising VIX environment, when everybody's selling the stock, when institutional investors are selling the stock, what you want to do, clearly you don't want to be buying the dips, you want to short the tops. And the way we short tops is by buying put options, right? So this is where the alerts were sent out last week. Don't have a picture of that here, but 1910 puts, 1940 puts, 1930 puts, they were all sent out. Also, starting right here, Monday, okay, so multiple alerts were sent out on Monday in the morning, right? So the first alert went out right here, 1885 puts. The second alert went out here, 1850 puts. Well, 1850 puts were worth like $6.50. So I know a lot of time I get comments like, well, BKNG and Amazon, you know, options on them are so high. You know, guys, please stop asking yourself a question, how much stuff costs. A much better question to ask is, how much is it worth? Okay, look, there's different ways to look at things, but from the perspective of trading options, you're better off owning one contract of something that is highly volatile than owning, for example, you know, for the same $650 here, right, of one contract of BKNG, you could have bought, you know, for $650, you could have bought maybe 65 options of something else that sells for 10 cents. But those options would have not moved, okay, while clearly this stock is in a very good downtrend. If you look at the chart, the volume in BKNG is exceeding any sort of volume that we have not seen in years in the stock. So the banks just keep selling and selling the heck out of it. That's when you want to own these put options and you don't want to get out of your positions. Okay, so what do we have here? All right, if you would have held these, okay, you know, this morning, they're worth in excess of $30. Okay, this 6.5 contract is worth way over $3,000. So, you know, everybody has different limitation situations with their accounts. So, but look, even if you would have just bought one, it's a clear, you know, 500-600% gain. And you could have done that. We've sent multiple alerts on that, right? Multiple. So you could have gotten in many times and build on your position on this one. But look, guys, we've been talking about these Chinese sector, right? I even posted a video, I think about a week ago, talking about how the Chinese stocks unanimously are dropping lower regardless of whether they're announcing good news or bad news. Okay, so there it is on Friday. So that was 72 hours, not 72 hours, 3 trading days ago, like Friday in the morning, okay, 9:13 before the market opened. I said short, buy puts on BABA, which is China, okay, YY, and Tesla puts, of course, okay, so that alert went out. All of these are making, well, depending on how much you were purchasing Tesla for, okay, Tesla is trading in the range of 342. When we were sending these alerts, it was trading in the range of, you know, 360. But, so Tesla did not move a whole lot. It moved quite a bit from the initial, you know, call we did on Tesla announcing that we're shorting it at 375. When everybody was piling up trying to buy it with this go private deal. But, okay, so in any case, if you're subscribed to alerts, you have multiple alerts, okay, warning you that a big move is coming. So if you miss one, you can definitely get in on another one. But let me show you. Not only alerts are going to make you money, clearly, okay? I don't have a crystal ball. We don't, you know, we can't make perfect calls every time. But if you stick with the calls that we do make and you accumulate 500-600% returns, your account is going to grow. But you can't just get in and get out of your positions, guys. It's that important, okay? So BABA, YY, Tesla puts at market open, okay? That was on Friday, okay? BKNG puts, we're taxing that morning, okay? That was on Friday. ICUI, hey, Shaq has put some really good trades. That was actually, you know, one of our students, okay? Who's been trading with us for 6 months. You know, he's nailed that trade. That was his trade. So I decided to send it out to everybody. After looking at it, I was like, man, this is a good trade, Shaq. Good job, all right? So that stock that morning when the trade was sent out was trading at 315. You could have got, and it fell all the way that day to 296. That's a $20 drop. Good job, Shaq. Okay, short stocks when they go higher intraday. BLK puts made money, okay? So a lot of these trades, if you just stick with them, they make money, okay? But let's fast forward. What happens to YY, okay? So we'll send multiple alerts on YY. Specifically Friday, as I just shown you, the alert was sent out when it was trading at $90. Okay, well, fast forward 2 trading days later, the stock is at 71 bucks. Okay, now that's more than 20% drop in the stock. I mean, that makes you guys over 800% returns on your options. Okay, and if you don't know the difference between trading stocks and options, guys, definitely click some of the links below, get more information, because if you understand, you're going to open an entirely new, different world for you as far as the percentage returns when it comes to trading, okay? All right, moving forward, okay? YY puts, again, we send another alert, right? When it was opening up on Tuesday. So these are the alerts from yesterday, right? Which was a Tuesday. I'm recording this at about 7 a.m. on a Wednesday morning. So this was yesterday, Tuesday the 14th. All right, we sent multiple alerts to short Amazon 1,900 puts. Depending on what you bought them, they definitely were making quite a bit of money at one point. Not too much. I mean, like double your money and sort. This is sort of a struggling trade for us right now, but it should turn very, very positive by the end of the day or over the course of the next 72 hours. Basically, this was a correlation trade based on AAP and AZO heading in the same direction. Once they were going to make a certain percentage move, they have a history of making a pullback, so that's when you would have come in, bought a bunch of puts. So that's a very interesting correlation trade. The results are to be known on that. But YY puts, right? I'm saying we're going to send you multiple alerts on this. Okay, YY puts, boom, there it is, 80, 85 puts. That was yesterday at 9.19 before the stock fell all the way to 71 bucks. Again, another alert about BABA puts, 170 puts. BABA 170, 165. BABA this morning is at 165 bucks. Okay, this was nice and easy trade. Guys, these trades are there. All you got to do is stick to them. All right, so what happened to BABA? Okay, so multiple alerts. Okay, first alert goes out when it trades at 179 on Friday. Boom. The stock actually tries to go above that level, as you can see, 180.65. So if you didn't have the patience to stay in this trade, guys, if you would have just jumped out because all of a sudden your option position is losing 20-30%, I mean, look, you would have missed out on this entire drop. All right, these options would have produced returns, insane returns for you guys. So you have to have the patience. Stay with the positions, okay? That's another one, and since I threw this one in here, this one had a substantial drop since we sent the alert, and this was actually a Chinese company reporting results last week. We sent multiple alerts around, you know, these 335, 340 range on Thursday. Well, since then, the stock just keeps dropping like a rock. Trades at a low of 195 this morning. So the stock moved over $40 in just a 72-hour time frame or 72-hour trading time frame. Guys, these are some killer opportunities right now in the market. Now, let me tell you the main observation, okay? VIX yesterday made, actually, yesterday it failed to break out of this cup with a handle, but still, the fact that it has not made a bullish cup with a handle intraday like that in a long time tells me that the VIX is actually only going to go higher from here. And by the way, if you have not listened to all the specifics on the VIX trade that we have posted on this channel a few days ago, definitely, if you're trying to be a better trader, try to go back and revisit it and listen to it. Okay, so VIX, cup with a handle. Cup with a handle, if you don't know what the heck that means, it's like a pattern on a chart that sort of looks like a cup. And this is an illustration of a handle. So anytime you see something like this, this is a very bullish observation. A lot of times when you see this, you know, stocks break out and they have significant upside. Typically, after you see a pattern like this, a stock has an opportunity to break out to the magnitude of 20-30%. So VIX this morning is around 14, so it's still close to that range. I think it could definitely break out of that range and go significantly higher. Now, 20% move in the VIX could be very easy. I think the VIX could easily go to 20 by next Monday. Now, today is Wednesday. All right, so very bullish observations on the VIX showing that it's going higher. Now, what's the importance of the VIX? Closing above 14.6. Or actually being consistently above 14, 14.5, specifically 14.6. Or if you look at the longer time frame, on the weekly time frame, on the VIX, 14.62 is a representation of a 200-day moving average. Okay, so once VIX gets above that, okay, it's got none but clear sky to go from there and shoot much higher. So that's the importance of that. Now, last couple of times, as you can see, you know, before August, it tried to get there a couple of times. It failed, and it fell lower from there. So this is a very important critical level that we're observing in the VIX right now. And it did close at 14.78 on the 13th. Yesterday it had a pretty good pullback, but it held strongly, and this morning it's back to almost that level of 14.78. So it looks very, very interesting. Now here's the most interesting observation. You're going to say, okay, you're calling for the market correction, 10%. You're showing us a few charts here, Google, Amazon, whatever. A few Chinese stocks are falling. Okay, what's the real deal here? What is your main observation? Here it is. Take a look at this longer time chart on the VIX. Okay, this yellow dot right here represents the VIX level, and more importantly, the rate of change in the VIX right before it got to the yellow dot. And you clearly see what happened after that. Now, if you've been trading in the markets for the last year, then you would know this was the end of January 2018, beginning of February, when the market was dropping on certain days 1,000 points, 1,200 points, 666 points. That is the representation of what the VIX was doing at that time. Now, the important observation here is the rate of change on the VIX. And to me, when I look at these two situations, I see that this rate of change is very similar to what's taking place right here. And the overall environment, to me, when similarly right here, when we had this market conditions, Amazon was trading at all-time highs right before this mini crash that happened in February of 2018. So to me, these conditions are very similar to what I'm observing right now is taking place in the market, but taking observations of the behavior of certain stocks, but taking observations of what some of the best stocks are doing. I think these conditions are very, very similar. And even though I'm not claiming that the VIX is going to go all of a sudden to 50, but I could definitely see VIX going above 20, maybe hitting a 30 range in the next 8 days. Okay, to add a little bit more fire to the situation, financials are done. Okay, of course, a lot of people are skeptical. You know, every time something happens overseas, it temporarily affects the stocks here in the United States, and then all of a sudden, the market is acting like nothing happens. Well, I'm not sure if that's going to be the situation this time, because the institutional activity, okay, all the talk about how great the financials are, and you know the interest rates are going to be climbing. Which, by the way, I'm not sure if they're going to be going much higher here, because technically speaking, to me, the economy right now is in a situation where the inflation is actually has signs that it may not go higher, because on these wage reports that we keep seeing, you know, there is no wage growth, and typically we should be seeing that by now, and we're not seeing that. So I'm predicting a situation where the economy is going to slow. We're definitely not going to be at 4.1 GDP anytime soon, and the inflation is also going to slow. So that's not a good environment for financial stocks. Therefore, I'm making a bearish case here for financials, and for the first time, we're seeing that Bank of America, as bullish as everybody has been in it, on August 9th, okay, which was, you know, the day before the 13th, a couple of days before the 13th, we're seeing some institutional investors selling a bunch of calls on Bank of America. And as soon as they do that, we have multiple consecutive days down in Bank of America. Yes, they rallies back a little bit, but you know, look at this huge uptrend that it had, right, since the earnings report. And now we're seeing a complete reversal of the trend, and there's multiple things that are pointing at in the chart. To make the case a little bit stronger, okay, not only we're seeing some activity in Bank of America, you know, they're selling calls, meaning that they're expecting the stock to decline, but we're seeing around the same time, you know, in the last few days, we're seeing some options activity, which looks very bearish. There's over millions of dollars actually going in. This is just a couple examples into buying JP Morgan $110 puts. Now the expiration on them is June 19th, so this is like a, you know, a 10-month bet here. But 15 minutes after that, they're also buying Wells Fargo 55 puts, sizable amount as well. So we're seeing people are putting a bunch of money into these puts, and we're observing the same things on the charts, right? That they're running into these levels that are not going to be sustainable. So the stocks are definitely pulling back. As much as everybody loves Bank of America, JP Morgan, they're clearly going lower. Some of the key divergences, right, is as they're actually going higher. Not that many people, everybody is bullish on them, but you know, the action, they're not really taking the action that they're speaking, right? They're actually, the accumulation distributions line showing us that Maybe a few people are actually buying. Everybody's saying that's a great deal, but not many people are taking action on it. Goldman Sachs, same situation. Goldman Sachs probably the worst looking chart. You've got this death cross. You've got the double top. You've got, oh, geez, you know, this is a very, very horrible looking chart. BLK, BlackRock, we've sent multiple alerts on that. I think the stock is going much lower from here. Right now, it's trading maybe at a range 475, 480. I wouldn't be surprised if we saw that stock at 450 in the near future. And the chart is just, it really favors that move lower. Okay, finally, BTC Indicator, Bitcoin, okay? One of the best predictors of a crash, the mini crash in February 2018 was the fact that the Bitcoin started selling off. And the Bitcoin clearly had multiple efforts to run, but every time it tries to run higher, it runs into major resistance, and there's just, people are starting to panic. They're starting to sell. They're starting to sell. At this point, people have had so many hopes that it's going to go higher, and it hasn't. And if you've been following this channel since the beginning, we actually recommended shorting Bitcoin with a trade at 18,800. People still giving us a bunch of BS about it. Clearly, if they would have listened to us, you know, if their primary goal was to have more Bitcoin, they would have sold it at 18,000 and bought it back right now at 5-6 grand. Our call was Bitcoin was going to drop to $3,000 by the end of the year. So hate us, love us, whatever. Okay, the charts don't lie. So let's take a look at another Bitcoin chart here. So we got recently tried to rally to 7150, drops all the way to 5800. So 58's been sort of the number, but I think in the near term, you know, as we clearly see, Bitcoin is slightly rebounding this morning, a few hundred points, but ultimately I think it will break through that 5800 in the course of the next couple of weeks here. BTC Indicator is pointing to a move lower in equities, just as it did 2-4 weeks prior to the February 2018 mini crash, right? So if we take a look, here's Bitcoin at 20,500, here's Bitcoin at 5,700, here's Bitcoin recently at 6,015. Okay, that is not, you know, right before the market tanked in February. We were seeing some similar activity in Bitcoin that was preceding the move in the United States stock market. So definitely watch out if we're seeing a further drop in Bitcoin over the next week or two. That could actually change my theory on the fact that a 10% correction is coming. I would say in that case, maybe we will see a 20% correction coming. Now, sometimes we observe things with the markets that I refer to as delay effect. Delay effect basically means that sometimes the markets are not correctly reacting to the information that is already available. So, in other words, for example, multiple times the interest rates would go higher, and the market initially would not react negatively, but 2 weeks later, it would actually drop significantly. So this is sort of one of these situations. If Bitcoin drops, don't expect the market to drop heavily the next day, but expect that move coming over the course of the next 2 to 4 weeks after Bitcoin does the drop. So key takeaways, guys. All right. So here's what I base my foundation for a 10% correction on. The tech sector is struggling to go higher. We're noticing that with key stocks. The financials are selling off. Between the tech sector and the financials, that's why the market has even managed to stay above 2,800 level on the S&P. Okay, if the tech sector starts selling off, which we are already seeing some early signs of reversals, okay, market has zero chance of going higher. Okay, now the VIX rate of change and bullishness is comparable to the conditions in February 2018. Okay, too many stock charts share double top and head and shoulder pattern formations pointing to the market top. And guys, if you don't know the double top, the head and shoulders, the loss of momentum, all that stuff is covered in my courses. You can click the links below, take action. Look, this is one of the best markets ever to be shorting. So you want to understand what these patterns are. I keep things simple. There's nothing complicated there. You don't need to be a rocket scientist. You don't need to have a college education. But you can use some of these basic things in the charts instead of listening to what everybody else is talking about in the news, and you can base your trading decisions off the charts to derive at some phenomenal returns right now by implementing very simple option strategies. Forget about the condors and butterflies and all that other complicated stuff which actually costs more money to put a trade on and actually limits your returns. When you have a rising VIX environment with the market that's all-time high, if you can identify the stops, okay, in some stocks, you know, all you need is just a directional bet, which is very simple. And if you don't know how to do that, look, I've got a 20-minute coaching call you can schedule. I can show you how to do that within 20 minutes. Okay, you're going to be able to go in your brokerage account and place an option trades within 20 minutes if need be. But of course, I would rather have you a better understanding, take some of the courses so you know you actually have confidence and clear understanding of what the heck you're doing. Okay, so 10% correction in the next 8 days with a high probability of further drop. And last but not the least, Bitcoin indicator confirms high probability of an upcoming drop. Again, guys, thanks for listening. I hope you have a very successful week trading. I'll catch you in the next video. Thanks for tuning in.